Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Friday the 5th of August. Starting off with the FTSE 100 and a decent bounce here at the floor of this rising trend channel from June. 66.15 was the low. That compares to the initial July resistance, 66.12, so old resistance became new support. Strong move here, which implies a target initially at least to the 6,800 level, which is an April resistance line. After that, end of day close above 6,800 would target 7,000 plus at the top of this rising June trend channel. Early bearish now back below 6,600, which would then target back towards the 50-day moving average at 64.22. But at the moment, that does not appear very likely. On to the DAX, and the good news here was the rebound above the 200-day moving average on Wednesday. 10,080 is the level there, so that's the notional end of day closed stop loss. While above that, we're really looking for a target towards 10,400, 10,500, which is post-April resistance for the German index. Onto the Dow, and clearly in wait-and-see mode here with the run-up to the non-farm payrolls later today. We want to see an end-of-day close back above the 10-day moving average at 18,432 before assuming a new leg to the upside and a possible top of June rising trend channel target at 19,000. Going the other way, no end-of-day close above the 10-day line risks back to 18,200 ahead of any new leg to the upside, but only really back below that level would suggest that a possible top is in place for this US market. Onto the S&P, and here relatively straightforward as a major index can be. We've got a rising trend channel from June, floor of the channel running at 2150. While we're above that, looking up to 2250, which is the resistance line projection of that channel. If you're cautious on this market, you wait for an end of day close above the 10-day moving average at 2167, RSI 58, so very much in the box seat as far as looking for a new leg to the upside. Continuing with the Nasdaq, which is arguably the star of the show as far as the major US markets are concerned at the moment. Support here coming here at the bottom of this rising trend channel from June, level with the 10-day moving average at 47.71, while there's no end of day close back below that. The target here notionally is high as 4,900, which is the 2-month resistance line projection. Continuing with the currencies, and we had cable in a triangle formation, broken below that on an end of day close basis. Basically the floor of the triangle from the end of June around the 131.50 level. So really, while we're below that, the risk is of a retest of that initial July support at 127.98. This stage only really back above 134.50, which is that June resistance line, would be a signal that this market was getting into bullish mode. Continuing here now on the currency front with the euro, single currency. Here we've got progress down within this falling trend channel from the end of April. Resistance at 112 and notional support at this stage around the 200-day moving average at 110.76. So trading that range at the moment, not an exciting market at the moment. On to dollar yen, and here you can see that even though there have been brave attempts to rebound, last 3 sessions very, very flat indeed, not able to break the momentum of these strong candles to the downside, the big one on Friday, and the second one at the beginning of this week. Really this stage back while below 101.50, it looks as though this market's going to head quite directly below 100 yen and possibly onto the floor of this channel, currently around the 97 yen level. Finishing off with gold, which wobbled a bit during the week but was helped by the Bank of England rate cut. Here you see that the metals are still well above the 10-day moving average in the floor of this rising trend channel from May, 1345. While there's no breakback below that, we're still quite confident of a $14.40 or $14.50 dollar an ounce target over the next month to 6 weeks. That's it from me. More updates at the same time on Monday.